Hey, welcome back. MPW just released its Q3 report and I want to share a few highlights and my thoughts about it with you. Full disclaimer, I own a few shares and I think this is a pretty undervalued investment, but more on that a bit later. We can see a decrease in AFFO to around 182 million, but looking a bit deeper, we see that most of the difference compared to last year is due to some fair value adjustments. Without them, it's pretty much in line with last year, so from this point of view they are doing fine. On top of the activities announced during the quarter, they said that they are going to sell 7 facilities back to a tenant next year, representing around 1% of the company's total assets. That's around $190 million, which is definitely going to help them pay the debt. We can also see a tiny decrease in the number of shares, which is something that I wish they would do more often. On the other hand, I also get that they may not be in a position where they have the kind of freedom to play with the money like that. I really don't think that we are going to see some major changes until we see a lower interest rate. The industry's recovery kind of depends on it to some degree, but so far things are moving in a good direction for the tenants. Look, I said this in previous videos, can the stock go to 5? Yes, and it did. Can it go to 3? Yes, even if things improve, but I don't invest in MPW thinking about what the market will do in a few months from now. What I care about is the company because that's what I invest in, not the stock. What's different for the business compared to July, for example, when the stock was above 10? Well, they cut the dividend, which I'll say again is a much better option than selling real estate, getting debt or issuing new shares. Then Steward also got a new loan, of which MPW was initially a part of, but they sold it after making sure that they get the money. They finished the sale of the hospitals in Australia, bought back some debt, and now they have almost 1 billion of immediate liquidity, which is enough to cover the debt left for this year and the next. I'll talk about the debt in more detail in a minute. Do you think these things are worth a 50% drop? The interest rates are also the same as expected and they will probably be reduced in a couple of years, which I see as a big catalyst for the industry's recovery, so nothing new from that side either. The debt is the same, well, actually reduced a bit compared to July, so that's also a good thing. The only negative thing I see is the fact that they started getting paid in equity in PHP instead of cash. Yes, that equity can be worth 0, but is it worth a 50% crash? Look, I apologize if I keep repeating the things that I said in the stock analysis, but I want to make the way I see this very clear. Looking at the numbers, we can see that if every tenant that they have goes bankrupt and they don't recover a cent in bankruptcy court, that is a loss of around 6 billion from what they invested in these companies, plus the rent while the hospitals aren't used. If this happens, they will have to sell some hospitals to settle the debt, but they have enough assets to do it. Most of the debt they have is due in the next 2 to 4 years, and after that MPW is almost debt free, which is a very big deal. To pay all this debt they will need, let's say, 6 billion. By 2027 they should produce around half of that money, so if they sell like 3 billion or 15% of their assets during this time, the rest of the debt shouldn't be an issue and MPW would be almost debt free. This would allow them to get more debt, invest it and just compound as they did before. When there is virtually no pressure to pay the debt, they won't even need to sell any hospital. At the end of the day, the industry is far from recovering, but I don't think this price is too accurate. Even if they don't manage to sell the real estate for what they expect, which so far we've seen the opposite, there is still a good margin of safety. Look, for me this was a buy at 10 and is definitely a buy at this price. I don't expect them to recover in less than a couple of years, but that should give me enough time to solidify this position at a good price. But again, my focus is the long term and I know that the market is going to be very volatile during this time, but I see a very good risk and reward potential in MPW. Now obviously there is a risk with MPW and I'm not telling you to buy this. A company can even be in an excellent shape, but the stock is not always going to reflect that. For me this is a tiny position in the portfolio, yes, riskier than the average one, but also coming with a nice potential. As always, what I cover in my videos shouldn't be enough for you to make any investment decision, so please do your own research before investing in anything. If you want to see more videos like this one, please leave a like and even a comment to help me out and make sure to subscribe. Thank you for watching and I'll see you next time.